LSE specialist mining services company Capital, which focuses in on the African market, has confirmed what it calls a transformative agreement with its largest contract ever. It's with the Egyptian gold miner Centamin, and it's worth around $250 million over 4 years. Jamie Boyton is founder and chairman of Capital. He joins us now from Hong Kong. Jamie, good to talk to you. Yeah, look, big deal. And of course, as you said in your statement, transformative. Just quickly recap, though, what it is you've got here in terms of an offer to shareholders in what the company does, because mining services obviously potentially takes in a lot of coverage. What do you do specifically?
Well, historically, we have been a drilling company, and that's still at the current run rate contributes about 89–90% of our revenue. But to your point, yes, mining services is quite broad. There are very few companies that offer multi-level services. So we still have exploration drilling, delineation, production drilling. We have laboratory services, assaying business, and we have an earth moving business, which is quite young. It's only been in existence for the last 12 months, and this transaction is obviously a very significant win for that business and takes it to being a material contributor to the company.
Yes, I was going to ask what it is you're doing now with Centamin. This is just an extension of existing contract arrangement with Centamin, or is it a new contract completely?
There's two different parts. We've been drilling at the Sakari site now since 2005, and we originally started in exploration drilling, and then we've moved the bulk of the activities to blast hole and grade control drilling in the operating pits. So that contract has been expanded and extended. So we've currently got 15 rigs at the Sakari site, and we're expanding that to 24 rigs, and the contract is being extended from September 2023 out to the end of 2024. So that's the first part. And then the second part is the earth moving contract. So we've won a waste mining stripping operation contract to move 120 million tonne of waste from the eastern wall. And that contract will commence in January of 2021 and also runs to the end of 2024.
You said this is a transformative deal. Clearly, it's a large amount of money over 4 years, $250 million. You last reported revenues, I believe, of $35.3 million, up 8.3% on the second quarter of this year. These were third quarter numbers. And if you look at the year on year, I think it's just like a 20% rise. Now, originally, I think up until about 6 months ago, you were called Capital Drilling, but obviously it is important for you now to continue to expand your business across the services. What is the split exactly now? And do you envisage that changing at all? Are you trying to push further the business outside of the drilling part of the organization?
Yeah, look, I mean, as mentioned, we're 90% drilling at the moment, but yes, we absolutely want to increase the scale of the other services. And the way to achieve that within the mining services sphere is to look at the earth moving part, because the typical tendering opportunities we're looking at across earth moving have run rates of $40 million per annum in revenue, and they typically are 4 to 5 year contracts. So the scale of them is obviously significant in the context of our current revenue run rate. We've guided the market this year to a midpoint of 135 million in revenue. So the drilling business itself is experiencing very positive conditions, but there's only so far you can scale up a drilling business, and this adds obviously a significant string to the bow in terms of being able to grow Capital's revenue.
Yeah, of course, Centamin based in Egypt. I believe you've got some contracts in Tanzania as well. Is that right? And I know West Africa is your focus. Do you see any other big business coming through? What's in the pipeline? I think I'm really trying to ask.
Well, the broad revenue splits for the business are a third coming out of what we call MENA, which is Egypt, predominantly in Saudi Arabia, a third coming out of Tanzania, and a third coming out of West Africa, which has grown quite strongly over the last couple of years, with the balance coming from ancillary revenues. The opportunities we're looking at are fairly broad. I mean, the drilling sector, as I said, is having quite a surge in demand at the moment, just reflecting obviously the very strong gold price and the reopening of the capital markets, particularly in the last 6 months. So there's broad-based opportunities in drilling. And then when we look at the earth moving, obviously a new business arena for us. However, we're actively engaged on a number of other opportunities, all within the African continent. So, we've got a very healthy pipeline at this stage of the cycle.
Do you see yourself expanding outside of Africa, or is this something you really want to stay with as a specialist in the region?
The strategy is to stay focused in Africa. I mean, we obviously do have one job in Saudi Arabia, albeit it's the same geological shield as Egypt, actually, and with an existing customer, Barrick, who we work with in Tanzania on a couple of different sites. So the focus will be to remain in Africa. We've been there since inception in 2004. It's in the DNA of the company, so that will remain the focus.
Yeah, and the interim dividend up 29%, I think, the last time you checked on this. What's your dividend strategy? Clearly, it's to reward shareholders, but what should shareholders know about your intentions with regard to these dividend payments?
Well, the policy has actually just been refreshed off the back of this transaction. It was previously a policy to pay out post-CapEx free cash flow. Obviously, we're coming into a rather heavy period for CapEx with this contract specifically. So the policy has been adjusted to be a payout of up to 20% of the net profit. So whilst it's a broad policy, the philosophy hasn't changed, and that is to remain a conservatively geared company, pay a modest dividend to shareholders on a consistent basis, which we think gets rewarded and appreciated by the shareholder base.
Trying to bring up a share price chart, currently trading at just over 60 pence a share. You're trading on the main market here in London. What's the message to shareholders? What are you seeing as built in at this sort of level? Do you have any of this new transformative agreement with Centamin, do you think, built into the price of shares at the moment?
Well, I think I think not. I mean, what this has done is grown our revenue materially. We're forecasting a good lift, commensurate lift in our EBITDA and profits. But the share price, as you can see, hasn't moved since announcing the transaction. Obviously, as part of the transaction, we have gone to the market with a $40 million capital raising at 58p. So that has obviously taken some demand out of the market short term, but certainly I don't think we have re-rated yet, given the scale of this opportunity.
Okay, let's wrap it up and just ask one final question about where we go from here. What do you see as the next points to watch out for in terms of news flow?
Well, the next key event for us is obviously the EGM to approve this transaction. We'll have a trading update in early January, results in March, but we're certainly in a part of the cycle at the moment where there is a lot of tendering activity going on. So I'd certainly be hopeful that there'll be further announcements over the next 6 months with respect to new business opportunities that we've secured.
Yeah. Okay. Look, Jamie, it's a pleasure to talk to you. Thanks indeed for joining us. Jamie Boyton is chairman and founder of the company of Capital PLC, the London listed business, currently trading at 60 pence a share.